Alright, what is up boys and girls, welcome back to another video on this liquidity supply and demand channel. Thank you very much for joining me indeed. Basically we're going to be going over the V-shaped recovery, which is the strategy that I've been trading on NQ. As here you can see NASDAQ futures, NASDAQ 100 futures. I've been trading this over the past few months and I've been shocked at how good the win rate has been. I've been honestly getting about an 80 or 90% win rate every time that I do get one of these setups in the market with the conditions that I'm looking for. So I thought I'd basically just go and make another video so you can have a look at what I've been trading, how I've been trading it, and the success I've been having, so you could potentially do this yourself, or at the very least have the knowledge that there are strategies like this that are doing really well. I think the way that the strategy, which I've borrowed heavily from Dodgy, if you know who Dodgy is, definitely go check him out. He's a fantastic trader and a really good mentor, actually really good for learning the ropes for futures trading. But you can see here I'm basically just going to be going through the chart and finding some of these V-shaped recoveries, showing you basically what I'm looking for, and then we can go from there. So basically what I'm looking for here, I'll just do a little showcase before I go and find some examples. So basically the setup is the strategy you're looking for. Basically you've got your market doing this, you're basically looking for a nice little bit of volume and momentum coming into the market. This is usually during open, isn't it? So say your market's looking like this, you're basically looking for a nice sweep of liquidity followed by that nice V-shaped recovery to the upside, which is basically your conditions for entry. Usually I take this on longs, just because, as we know, the NASDAQ as a whole is perma bullish, although you can take this with shorts as well with good success. But basically you're looking for something like this, and then once you get that nice little liquidity sweep, say we come down like this, you've obviously got your nice level here of liquidity which has come down and been swept. You're coming into a nice area of discount. Obviously we've been trading up in a bit of a premium on the day here, so you can see we've created our conditions here for our potential V-shaped recovery. And then once you're looking for this, you're looking for a nice little fair value gap in here as well, which would be your entry condition. Say we've got one like this and we're basically waiting for the market to come back up. If we start to get something like this, and then once you close back above that inverted fair value gap, which would be your entry condition, provided that you've got a good amount of volume here and it hasn't taken too many candles for this to form down here and we're not just consolidating, you're basically looking for a big sweep followed by a pretty instantaneous V shape back to the upside. Once you get that, I would generally be entering my manual stop loss if we close back below the inverted fair value gap, and then you're just looking to take profit. I usually start with a 1-to-1, and then you can leave runners to the upside. You can see there's a few areas here where you could target. We've got an internal swing here, as you can see, which is probably where I would go break even. I'll be looking to take profit at that next swing, which happens to be the 1-for-1. And then you could leave runners up to these higher levels, maybe even all the way up to the high of the day. This is generally the model that I use, and I've been having an absolute ton of success using it, to be honest. It's been absolutely fantastic for me over the past few months that I've been trading it. So now that we've got all of that out of the way, that's pretty much the entry conditions for the model, the basics of it overall. Let me just get rid of this. There was actually a perfect example of this on Friday, which I think was a really great example of what we're looking for. So as you can see, this is Friday's price action. I'm actually going to do this in replay mode so you can get an idea of what I've been looking for. So let me just so basically I'm here, I'm waiting for open, because that's usually when you get the most volume. We obviously had that big dump overnight in Asia session, so I'm looking for basically a big swing in open. As you can see, we're kind of just waiting here, waiting for the volume to come in. You can see we get this massive move to the upside here on the 5-minute. I'm thinking potentially this could be actually a V-shape move back down to the downside. If we take a look at it on the 2-minute here, you can see we've got a bit of chop and a bit of swing. I think there was actually an entry. Yeah, on the 1-minute here, you can see you've got your move to the upside, back to the downside. You've got your inverted fair value gap. You've got your liquidity sweep followed by your manipulation leg. You've obviously got your entry here. You probably would have entered here on this candle that moves back to the downside. We came back up, got a little bit of a crazy swing to the upside here, but this actually held. We came down. I would have gone break even here. Once we came down and hit this internal swing swing low because you don't know whether or not this is going to reverse back around. And I think I remember this was a break-even trade. As you can see, we came down, we came back up and hit my break-even here. So that was a break-even trade. So then after this, I've seen this happen once. I'm thinking, okay, where's the liquidity now that we could potentially be looking at targeting and then getting a reversal from? There's obviously this obvious major swing low down here. So then I'm thinking, we've obviously come up, we're massively in premium on the day. We're looking like we're probably going to retrace most of this move here. So I'm looking, I'm waiting, and then we start to come down. And I'm thinking, okay, once we start getting close to this liquidity level, you're thinking, right, we've come down, we've tapped that low, we've taken that sell side liquidity. We start coming back up here, and you can see we've got a lovely sweep of liquidity followed by that V shape. We've got a fair value gap here, and then I entered on this candle. Obviously my stop loss would be a manual close back down below this level. Looking to target up here. I've got my 1-for-1s at this swing high, and I'll probably go break even there as well on the rest of the position and leave some runners. My runners here probably looking to target up towards this liquidity. We've obviously got a very big candle here. I think this was actually a data candle off the back of news, and then you've got your high of day as well. So this was my entry. I'm looking for the 1-for-1 to start with. You can see we come up, we go up. We hit my first target and the second target pretty quickly here. At this point, I've took off 1 hour of risk, and I'm basically break even now. So this is a free runner and a free trade all the way to the upside. We continue, a little bit of chopping around. As you can see, my break even down here was never hit. We come up, we've actually hit the second target there, which is the data high. So that would be 2R taken off there, and I've got my final runner, which is at the top of the high of day up here. We click through this for a little bit of chop to the side, and then bang, we come up and hit the take profit. Absolutely textbook, beautiful V-shaped recovery to the upside. This was an absolutely fantastic trade, which happened just on Friday. So this is not just me like cherry picking random, go back and cherry picking trades. This was literally on Friday, a trade that I took personally and was a really good trade. This was pretty much as textbook as it gets, apart from the fact that there wasn't a manipulation leg. You probably would have wanted to see the sweep, come back up, get the manipulation leg, and then get the move like you did on this one. But this is still a really good setup. As you can see, it worked pretty much to perfection. And you could always imagine, if you look at the context of this as well, we've got this huge void that we got from the news dump that we saw. So you're probably more likely than not to come back up and fill this eventually. We obviously tried to do this. We got that nice Judas swing back down, took liquidity, and then continued up. Absolutely textbook V-shape. You can see this is just obvious, super obvious V-shape back to the upside. In hindsight, this looks like such a unbelievably obvious play, but obviously you have to know the signs for the potential reversal. But you can see once the liquidity here taken, inverted fair value gap, enter on the close above that inverted fair value gap, stop loss below, target a 1-for-1, go to break even after you've got your 1 hour of profit, and then hold a runner to wherever you see fit above where you think you're going to go and take liquidity. You can see we took all the liquidity of this downwards move here all the way back to the upside. Beautiful trade. That's going to be it for today, guys. This was a perfect example that happened just this Friday, but if you go back through the charts, you can see pretty much there are tons of examples of this you can go and try. Pretty much all of these areas where the market V-shapes, there are potential trades to be taken. There's loads and loads of these. As you can see, the Nasdaq really has this tendency to come back up and recover in that way. I hope you enjoyed the video. Please do like and subscribe and leave a comment, and I'll catch you in the next video. Cheers.